Sappi has had a tough second quarter. The pulp and paper producer has posted a 6% decline in sales for the period. But when viewed for the half year, sales were 15% lower. This impacted interim earnings per share, which fell 51%. That as underlying market conditions remain subdued due to the challenging macroeconomic environment. Looking ahead, the group stated that the third quarter is seasonally the weakest in terms of demand for its products, but says it's well positioned with healthy cash reserves and liquidity to manage current market uncertainties. And joining me now for a closer look at what's playing itself out in the Sappi's performance is CEO Steve Binnie. Steve, an absolute pleasure and a good afternoon to you.
Good afternoon. Thanks for the opportunity.
Brilliant. Steve, keen to get your thoughts on the second quarter performance and how that does feed into the overall half-year performance, maybe looking at the top and bottom line.
Yeah, look, we've come off a challenging 12 months, and what we've progressively seen over the last 4 quarters is a progressive improvement, and things are getting better. They're taking time. It's not recovering as fast as we would like, but certainly moving in the right direction. So our earnings year on year were, for the quarter, were 10% higher than last year. So we're pleased with the performance, but obviously the global economy is still under pressure. The macro challenges are out there. The consumer is still under pressure, and obviously a number of our products depend on consumer demand.
I must ask you about that second quarter and that 10% increase there in earnings, Steve. What can be attributed this to?
Twofold. Our biggest and most important segment is dissolving pulp, and that market has recovered quite nicely. We've seen demand pick up a little bit from the lows, and on the supply side, there's been limited or less supply. So the market's been pretty tight, and in fact, prices during the quarter jumped quite nicely, and it enabled the segment to deliver higher earnings. Then, if we turn to our paper segments, the recovery a little bit slower. However, we were able to take substantial costs out of the business. So actually, the profit there was also higher because of that. So twofold: top line growth in dissolving pulp combined with costs in the paper segment.
In the past, Steve, you did mention issues around the Middle East and how that is impacting supply chains. Keen to get an update on that one.
Yeah, it causes a headache, and obviously it causes delays in getting shipments. We're a big exporter out of Europe, and obviously the challenges in moving around has meant we can't get product to the customers as fast as we'd like. And linked to that, as you would imagine, it does push up costs for logistics. Having said that, we have put in place alternative plans. We are managing it, and those higher costs are now already embedded in the numbers that we reported.
There's also seen a big maintenance happening at Sappi. Steve, speak to us about this, so the cost implication of it, but also if that impacted production volumes and to what degree.
Yeah, in the quarter ahead, we have 2 big scheduled maintenance shuts. These are big plants, and some of them we have annual shuts, some of them we have 18-month shuts. And in the quarter ahead, we have 1 big shut in South Africa at our Saiko mill in Kumas, and then we have a big shut at our one of our mills in the US. Those are occurring obviously in this quarter ahead, and the net impact on that on our profitability for the quarter is about $30 million. And it's for that reason that we did say that the outlook for Q3 would be lower than Q2. But taking that into account, the actual underlying performance of the business continues to improve. So this is scheduled, and I am pleased that the business is progressively getting better each quarter.
Let's also touch on the balance sheet. We know that Sappi was determined to reduce debt, but also you've mentioned here liquidity and cash reserves being in a good place.
Yeah, we strategically we have set ourselves a target to reduce our debt down to $1 billion. For many years, it was substantially higher than that, and we committed to bringing our debt levels down. It's a journey, obviously. In the quarter that we just finished, we did close 2 mills in Europe, and there was a cash outlay related to that. So that meant that net, we utilized cash in the quarter. However, we are still on the journey towards $1 billion, and we will remain committed to achieving those levels.
I'm also keen just to get some insights, Stephen, where we are in terms of just the strategic direction of the business. We know in the past we've spoken about, reducing exposure to graphic paper, growing the packaging business there. Where are we in terms of that? And are the current macros that we're seeing shifting that strategy in any way?
Yeah, broadly, we've been on a transformation journey, and if you went back 7 or 8 years ago, Sappi was about 75% revenue exposed to graphic paper. Graphic paper predominantly goes into magazines and high-end marketing literature. That has been in decline for a number of years. And we've been reinventing ourselves and making investments to grow in the packaging space and converting capacity. Now, as we sit today, we've now managed to reduce our exposure to graphics to about 40% of our revenue. We have a big project underway in the US, which will reduce that even further. So by the time we get to 2026, we're going to be down to about 30%. So it doesn't happen overnight, but broadly, we're moving in the right direction. And overall, with regards to our strategy, on the revenue side, we're repositioning the business, reducing the risk, and shifting towards growth segments. And on the balance sheet, as I said to you, we've fundamentally repositioned the balance sheet, and we have debt at close to half the levels of where it was 6 or 7 years ago.
And before I let you go, Steve, keen to get your thoughts then on the outlook. You have mentioned that Q3 historically not the best quarter for you, but also this maintenance will be kicking in. So maybe we can touch on that, but also capital allocation looking ahead there, and how you are looking at making sure that you use your capital the best way possible.
Yes. Look, in terms of the quarter itself, we have guided that the EBITDA will be down quarter on quarter, but it's not because of the underlying demand for our products. That continues to improve. It's purely because of the shuts that I mentioned. And I would expect that the final quarter of the year, we will continue to rise in terms of profitability. Capital allocation, as you would imagine, for a business like Sappi, is extremely important. And the main project that we have underway at the moment is a big conversion in the US at a mill in the state of Maine. We're expecting to complete that project in about April of 2025. It's on track, it's on budget, and we're very excited in that because, one, it reduces exposure to graphics, but more importantly, it gets us more volumes in the growing packaging segment. And the returns that we anticipate making are very attractive. And so coming back to your question on capital allocation, these are value-enhancing projects and will deliver significant value, we believe.
Brilliant, Steve. An absolute pleasure hearing from you today and looking forward to more interaction in the future. That was Sappi CEO Steve Binnie.